Good morning, everyone, and welcome to the Kase chat session on December 3rd. My name is Dean Rogers, and I'm the Senior Analyst here at Kase & Company. And today we're going to go through a couple of trade setups on the E-mini S&P 500 and Apple. Now, as always, we all know that trading is risky, that we can lose money when we're trading. So what we're doing here is purely educational. This is not advice. This is not consulting. We're not telling you what you should or should not do. We're just trying to show you how to analyze the markets and how to make some informed trading decisions. If you guys ever have any questions, feel free to email me, dean@kaseco.com. I'm going to probably start doing a lot more of these trade reviews and setups. You know, if you guys have any suggestions on things that you'd like me to cover, please shoot me an email, dean@kaseco.com. You can always follow us on Twitter too, @kaseco. And then we also have our two websites, StatWare.com and kaseco.com, where you can find lots of educational resources, information about all of our services. You can take trials of all of our services. The E-mini S&P 500 has kind of been on a tear, over the last couple of weeks. Market had moved up from this 1813 swing low, came right back up. It was able to hold this previous 1803 major swing low. We had talked about it, around that time that was going to be a major support point, because if it took out that 1803.25 swing low, that was one of the last major swing lows that the market had. It was going to probably try to continue to move down towards this 1732. It held, it moved up in a pretty rapid succession from 1813 to 2075, over about a 1 month period, month and a half period of time. And it was almost a straight move up. There was really very minimal corrections on the move up. So, assessing where this 2075 swing high, there were some targets in that area. We've gotten a small correction. You can see here on the daily chart that we started to see the market stall. It moved down. We had a 2-day move down at the end of last week, but then so far this week, or last week and then early this week. So far, though, this week, the last 2 days, we've got a bullish little engulfing line here, even though that's not at the bottom of a market. Still a bullish signal yesterday. Follow through on that today, looking like we're going to try to test this 2075 high. So far the high today is 2072.25. Now the weekly chart, I was going through this analysis with one of our clients yesterday, nice gentleman that traded E-mini, and we were going through and looking at this evening star setup on the weekly chart. And I thought that was really interesting. Let me take this. So we were going through this evening star setup here. Okay, so we have our star, we have our Harami line, we have the evening star setup. And the big thing that we really need to watch there is the midpoint and the open of this candlestick here, right around, the end of the week of November 21st. And the reason that is this 2050 level is the completion point. Once the market closes on the weekly chart below that 2050 level, we're more than likely going to see an extension to the downside. You can see exactly where this market came down this week so far to 2048.25 and held that level on a closing basis. So you can see where support was. This is the midpoint and confirmation points are great for identifying support and resistance. So that's, coming back up. We're going to see where the week ends here. We're not at the end of the week yet. We're only halfway through. But once this week ends, if it doesn't close below that 2050, especially if we go on and make a new high above 2075 and close above that, I think this market's going to continue to move up. Looking at the analysis of waves and Fibonacci projections and everything else, the first target here is 2089. So that's going to be, yesterday when I was talking to this gentleman, we were going over this and doing this analysis, we were looking at 2065. 2065 was the 62% retracement. Okay, if we look at this 2065 right here, 2065 was the 62% retracement of the move down from 2075.25 to the 2048.25. We've closed above that. We're above that level right now solidly. That's still, if we close back below it on the day, 2065 is still going to be key. If the E-mini is going to continue to move up in a significant manner in the near term, I think the week's going to need to close above at least 2065, not even just at 2050, but I'd really like to see it close above 2065. If that's the case, I'm pretty confident in buying this market upon renewed buy signals on the daily chart or on the intraday buying, going long as long as the market's able to stay above 2065. The next target is going to be right around 2089.67. That's a pretty important target for a lot of these waves. But if we really look at the move up from 1813, the next big targets are 2132 and then 2210. Now I know those are a long way off. We're talking weeks, if not a few months, to get to some of these levels. But this is kind of a bigger, broader term perspective here. If we want to do a shorter term analysis, I would look at more intraday charts. And maybe that's something that I'll do going forward in the future. But for the time being, I just want to really kind of give everybody an assessment of what the bigger, longer term picture is here. We definitely have a lot of potential up towards this 2210, and that's because that's the smaller than or the 0.618 projection of this entire move up from 1813 to 2075. Now, right now, as far as this market's concerned, when you look at this on a daily chart, in fact, let's go to here and let's look at this on a daily chart. Wrong chart here. So here's our daily. Let me put up my case swing. Okay, looking at that move up from 1813, if you try to start, assess the biggest retracement, well, right now that's going to be 2075 to 2048. So right now that would be wave A. Not a very likely wave A. Ultimately, we are going to probably have to get a bigger correction. Just not looking very likely right now. It's looking like this might be another minimal correction like a lot of these have been. The other wave that I'd liked initially, and that's because it was the first wave that really had a correction, was this 1813 to 1985, and then the subwaves up from there. You can also see that this market's becoming kind of asymptotic here, where it's starting to turn down a little bit. So, I do think that we could get a bigger correction soon, but for the time being, I really am looking at this market. I think it should be able to move up to this 2089.67. That's the next potential stalling point. If it gets above that, the most confluent target right now is this 2116, and that's a target for some of these subwaves. And then we're looking at the 2133, and that's really going to be the major target. That's the equal to target for the wave up, that 1813, 1985, 75, 1959. From there, you've got some confluence right around 2200, but that 2210, that's going to be the next really big target. It's got some intermediate resistance around 2165. The 2210 is just extremely significant, though, because when you look at this move up from 665, so if I go in here and I look at the weekly chart, okay, and I look at the move up, let's make this case swing 3 so we get a little less definition, and we can actually read our numbers here. Okay, we look at 665. Our biggest wave up from 665 is the 665 up to 1373 to 1068. That could be a wave 1, 2. We're trading in wave 3 right now if we're looking at Elliott wave. And so when we start to look at that projection, the next target, the larger than target, is 2213. If I were a betting man and I was looking at this market and saying that we're going to have a 5-wave formation and we're in wave 3 right now, the major stalling point, okay, we've overcome the 1.382 intermediate target at 2046. We're flirting with that at this 2075, but again, we've sustained closes above that for quite a few weeks and even over a month. So the next target is 2213. And what I was getting at is, this is going to be a 5-wave formation. Doesn't mean that the move up is going to end at 2213, but I would expect to see another major correction at 2213. And we've got the confluence to confirm that. So I'm going to watch that, over the next couple of weeks, months, going into next year. I am going to be watching for 2200. Right around that 22, what's my confluence point? 2210. Let's watch that number. It's going to be a really important number. Okay, and we should continue to see that number come up time and time again as we move forward. As far as support is concerned, right now we've got the waves down. Those are changing, moment by moment throughout the day. I'm going to go into a 5-point case bar chart here. So right now we've got the 2075 down to the 2048 up to the 2072 here. It was 2071 when I ran this analysis this morning about 15, 20 minutes ago. But the targets that we're looking at, 2054 is the smaller than, or the 0.618 down to the 2044. If it can get below 2044, and I know that that's a pretty major target, we should see right around this 2027. So these are the confluence points that we're looking at here. We'll zoom in on those a little bit. 2054, 2039, 2023, 1995. And if we look at the retracement of the move up from 1813, that 2020 is the 21% retracement of the move up from 1813 to the 2075. So that's going to be an important, minimal correction level. And then if it gets below that, the 38% retracement, which is going to be crucial for a normal correction, is going to be 1975. I'm doubtful that we see those numbers anytime, in the next week or so. Right now, the way this market's looking, it wants to continue to move up. It wants to continue on to make a new high. And I think it's really poised to extend towards this 2089. And as long as we can stay above that 2065, I'm pretty confident in taking long trades. All right, so if we look at StatWare, as far as StatWare is concerned right now, this is on a 5-point intraday chart. We should be long. We had our first long signal here. Okay, that's the green, warning us that the market may be transitioning into a long trade. We get our second long signal here, which is a first-class blue signal. Good, strong buy signal this morning. That was at 8:39 a.m. Good, strong signal. We're long right now. As far as the daily chart's concerned, we did have a first short signal. If this 1975-25, or excuse me, the 2075-25 swing high can hold, and the market starts to move back down and we get another sell signal, then we can get short on the daily chart. But for right now, again, we're still looking long. I'd be cautious if I'm taking any short trades. I would not at this point personally take any short trades on the daily chart, because there's just way too much risk, and the market's going to probably continue to fall from, continue to rise. So it'd be a risky trade. If I'm going to take short trades, I'm more than likely going to be taking those on the intraday chart. All right, so let's take a look at Apple. Switch my charts over here. All right, let's start off with looking at a weekly chart, just kind of giving an overall feel for the market. All right, big down week so far. Had this nice transition up. We talked about this whole coil / bullish flag formation pennant several weeks ago. Market broke higher out of that, met a major target right around 108.46 or so, 108.78. Let me see what our target was. If I remember right. Yeah, it was 108.76-ish. So, and it stalled there, then it broke higher again. It stalled just this, early this past week, or early this week, 119.75 so far as a swing high. Came down pretty hard on Monday, but we're already back above the high-low range midpoint. So I think any kind of move down right now, at least initially, if we look at even at the daily chart, you've got this low which kind of had this blow off here. So the market moved down, you get a little bit of a blow off low, you're starting to move back up. I've been watching the midpoint of this candlestick, initially somewhere right around 117.20. Also the open of Monday, which is right around 118.81. Those are going to be levels that I'm going to want to watch. However, I'm thinking at this point any move down is still going to be corrective. I'm not quite convinced that we're going to even extend this move down yet. We could, but we've got some, we're kind of at a decision point right now, very short term, and I'll show you why here in just one moment. Let's actually look at our move up here on the daily chart with our Kase swing indicator, and let's start looking at our analysis. So when we look at the analysis, the main wave that I'm concerned with right now in trying to predict where the markets are going to, the longer term, bigger picture, is this 95.18, 119.75, 111.27. I mean, there's a lot of waves here, a lot of big waves going all the way back. We're in this long-term uptrend. Really no indications, significant indications yet that Apple is going to stall. Now, Apple does, it's really overdue for a major correction, and I think that's going to probably happen here, in a reasonable amount of time. If we look at this weekly chart, looking at the move up from 55, we can look at this 55 to 82, 16 right in this area. And if we look at the waves, that 55 to 82, 16, we can see that there's some targets here. We've overcome the larger than target at 114.83. The next targets are the trend terminus and XC, 183 and 145. Now, I didn't even color those because those are pretty far away. But that 145 is going to be interesting. Apple to me is just getting to a point where it's due for another major correction. Again, I don't know if that's going to be right now yet. If we look at this move up from 73.05 or even from the 70.51, so the 70.51 up to the 103.74, which was the swing high here, back down to the 95.18, we haven't met the equal to target yet, which is right around 128.41. Again, a little higher than most of my analysis. I go up to 135, but it's pretty close to that 127, okay? So I'm really looking at this and saying, I think that we're going to probably extend up towards this 128 if we start looking at the move up from 95.18, and we go back to our daily chart here, and we look at that 95.18, 109.90 wave. So the 95.18 to the 109.90, again, we've met the smaller than, we've overcome the smaller than, but we haven't met the equal to yet. Okay, so again, I really think once a wave, not think, but just our evidence in our studies show that once we meet that smaller than target, usually we extend with the equal to, so odds are still in favor of that. If we look at the move from 95.18 to the 119.75, so that entire move up, which will more than likely become the wave A, right? This is a much bigger correction than the move down from 109.90. So this is more than likely the wave A, B, C now, and it's some subwave. We're looking at least 126.45, which is again kind of within $1, plus or minus $1. If we had a target around 127.40 of that earlier equal to target for the wave up from 70.51. All in all, though, what this market's showing us is that it should extend into the 120s, and if it reaches this 126.45, there's a good shot for 135.84. That's also a complement for some of these other earlier waves, and that's starting to work us toward that 145. So even though I do think that Apple is overdue and in need of a major correction, the fundamentals aren't there at this point, and the market just really isn't showing us any signs yet, any major signs that that's going to happen, at least from a technical standpoint. You can argue whether or not Apple's overvalued, undervalued, whatever else. Right now, what I'm seeing on the charts is a market that got to a point where it stalled. We had a correction is beginning, but I'm not sure that correction is going to extend a lot further. Not yet. I really don't like the fact that, it's already retraced half of the move down on Monday over the last 2 days. We are also, when we look at the intraday chart here, let's look at a 65-cent case bar. So this is a 65-cent case bar. So if I look at the move down from 119.75 down to 111, and I look at the retracements, what's kind of interesting there, retracements. Okay, 116.53 is the 62% retracement of the move down from 119.75 to 111. 116.51 right now is our swing high after the 111.27 swing low. All right, so we stalled right at that 62% retracement. What have I said over and over and over during these sessions? 62% retracement is always the most important level. If we can overcome 116.53, That to me, as soon as I get confirmed buy signals, whether it's on intraday charts or on the longer time frame, daily charts, weekly charts, I'm buying back in. Unconfirmed buy signals once it gets above 116.53. If it does that, the 116.53, we get connections up to 118.33, 120.20, or 122, the 127, and the 136. Okay, those are our targets there that we just went over. As far as the downside is concerned, you know, this is the major wave right now, 119, 111, 116. That should actually be 116.51, so I apologize about that. But nonetheless, it's not going to change these that much. All right. All right. So we're looking at basically 108 right now is going to be our equal to target. If the market moves down below this 111.3, then we're in trouble. Okay, so 111 points or 110.82, and that's because that's also from the 95.18 up. That's a 38% retracement. So our major support point right now is going to be 110.2, right? Or excuse me, 110.8. If this market breaks 110.8, it's in trouble. At that point, I'd be willing to take short trades. I'd be willing to get into short trades. I would treat them as a corrective move. I'm not going to necessarily scale those to my longest bar length, my normal monitor chart, my highest time frame, or the daily chart where I'm taking a lot of risk. What I am going to do is, if I'm going to trade those, I might, go out and play some options or take some short trades on the intraday charts. So 110.80, that's our big number. If it breaks that, we're looking at 108, right around 104.75, 102.80, and then possibly 96.07. And those are all confluent. Those connections are made through these waves. Okay, so if it gets below 110, or the 110.8, look for the 108. I doubt that's going to take place. To me, that would be the quote-unquote secondary scenario. I probably give that maybe 35%, maybe 40% odds right now. 35% odds seems about right. I really do think that this market's going to be able to overcome that 115, or excuse me, that 62% retracement at 116.53 and try to continue to move up. We'll see, though. I mean, you can also see kind of, I can sit and start making evidence that maybe we have a ascending bearish wedge here too. So, it's a tight call right now. I'm still bullish longer term. I still like the move up. If it breaks the 110.80 area, near-term support's going to be right around this 112.75. If it gets below 112.75, I'm going to start getting nervous. 110.80, I'm getting bearish or negative short term, and we'll see where it goes from there. But otherwise, if it can overcome this 116.53, which it's really trying. If it can overcome that 116.53, it's got a good shot.